Hello traders, this is ICT with the Pro Traders Club entry for March 31st, 2011, the last trading day of March. And guys, if you think about it, we just put down a quarter of the year of 2011. That's amazing how time flies when you're having fun. Okay, we are looking at the fiber, and we are going to review a few things here today. A couple different opportunities unfolded for us here. So let's take a look at what we have. Alright, yesterday we had price basically consolidating and range bound choppy condition. Let's go to a 15-minute chart real quick. Okay, price traded down and sloppy and worked within both the S1 and central pivot before gunning the lows here. Then price traded above previous day's high in here and daily high here. Then consolidated and found support at an important reaction high here. Okay, so we've already learned that when price trades up and it consolidates and moves sideways, there's a likelihood of that leg repeating up. Okay, so if you take this range here to here, let's do that with a fib real quick. Okay, taking the 100% level right here. See 100% here. This would be a reasonable objective. Okay. Notice that this level was actually able to be determined before new trading day and ADR calculations would have been ran. So before this line here at 142.14 was even calculated, swing projection analysis would have given you an indication that 42.10 roughly institutional level, small number, could have been a likely upside objective should price move out of this consolidation and break higher. Okay, so now let's go back, take this fib off for a moment. Okay, so we have an important high here. Okay, so let's drop a level on that. Okay, and let's draw a line on this highs in here, right on the bodies of the candle. Okay, so notice how I use this candle here, the body of this candle here, and more or less the body and wicks of these candles in here, and the bodies. Also notice how they respected this level here. That's more or less, I don't want to say the word secret, but that's the principle when you're using support and resistance levels and you're drawing lines in there. Unless you have a real major reaction level where you have a long candle wick, try to use basically the bodies of the candles, and you'll be more or less finding the areas that are actually having natural support and resistance. Alright, so getting back to our example here, price consolidated, okay, and at 2300 hours, make a note of that, guys, on your checklists. At 2300 hours, okay, you're going to see an initial surge one way or the other. Okay, and we have it here, traded up to the session high in here, traded off, found support at this dealing range high here, dealing range high here. Once it's broke above, now it's going to be a support level. So market makers are basically making bids and offers and asks and all that between these two levels in here. Okay, and what they're going to do is, and I was watching this real time, and I watch the price come down in here. Now when you look at it slip below here, you have to remember that here's a low here, here's a low here, here's a high here. Okay, all these highs in here, there is an accumulation in this vicinity. Okay, so when you see price trade down, okay, into levels of expected resistance and support, it's very difficult for new traders to trust that price may in fact find support. Okay, and you want to also notice that this high over here, see how it's just basically standing out here all by itself. Price made a run up here and try to challenge it. Let's draw this line over here and include that in our analysis because it does factor. Okay, let's now we're going to use this level because notice how it also contains the bodies of these candles here. Okay, pretty neat how that works, isn't it? Now, obviously, as a market maker, okay, we know that there are stops right above this level here. Why do we know that? Well, because price has been trading within this range. Okay, let's draw a line real quick. Okay, essentially in this trading range of this level and this level here. Okay, notice how price has been contained within that region of price boundary. Well, since price has not really traded up to this level here, okay, people that are waiting to trade a breakout because they see this as a trading range, okay, and the lesser versed traders in terms of technical analysis, they like to bracket the market. So they'll put a sell order below these lows and they'll put a buy order above these highs. Okay, and what they're basically attempting to do is when price breaks above a high like this, hopefully it'll do like it did here. Okay, or vice versa, if it breaks down below these lows and it enters their sell stop, they will hopefully be net short and catch a ride of some sort in terms of whatever their swing magnitude or projection would be for a target. But typically what you'll see happen is price will just flirt with these highs. They'll go up a little bit and they'll sink all the way down about the 50% range of the major consolidation or trading range that's working. And what it does, it basically trips the orders to get people in long, okay, and to offset or squeeze those individuals out of the market. The price will dip down, and it's not doing it here, so it's kind of making it very difficult for me to illustrate that because I probably should not be using this example. But basically, when you see these highs, okay, and they break above it and they pull back into the range, okay, it's intended to squeeze you out of the position, okay, and since you're basically going to be net long in here, to get out of the position as you're being squeezed, you're going to sell it. Okay, so when you're selling it to bail out of your now losing trade, who's going to be buying it? Somebody's got to take the other side of your trade, right? So if the market makers and powers that be, smart money, are squeezing the market lower, okay, after a high or has been penetrated, they know that the stops have been tripped. Okay, so they're trapping individuals in the market. Okay, and it's like a riptide effect where it pulls back, okay, and squeezes and squeezes and squeezes, and it can pull back as much as 62% of the trading range. Okay, and what will happen is you'll think that, oh no, this is a double top and price will trade lower and I'll be dead in water, so I'm just going to close the trade out here if your stop hadn't already been tripped. So as soon as you sell, they're in there scooping up all those sells and they're accumulating what the real move is going to be. They're buying long, so they're going to be net long. Okay, and this is kind of like a mini version of that event. Okay, so we're going to use this trading range area here come back to this high in a moment. Okay, we'll use this area right in here. Yeah, right there. It's good enough for government work. Alright, so now we have this high here. Price trades down, trades up, trades down, trades up above these highs here. Okay, and dips down and finds support. Finds support again. Notice how it's keying off of this old high here. Okay, now we're going into a new day. So we have every reason to expect that this level up here should be tested at least. Now, should price trade above this level, okay, notice how it went up here just enough to go above this high by a few pips and then drifted back lower and then found support in here on these highs here. All of a sudden broke above. Now we have price above this high, this high, and this high. Now that resistance broken becomes what? Support. Now this is what's going to get you in trouble if you're just using pivots. Notice how we went right up to this level here, R1, and then traded back down. Gave a nice inverted hammer in here. Okay, but it's swept below that level. Okay. Notice it didn't go below here. Didn't go below here. It just broke just enough to go underneath this level here. Okay. Nobody was willing to sell into that. Okay, there was more buyers than sellers, and price traded up higher. All the way up through R2, ADR at 142.10. This is 142.14. I'm using institutional level because it's so close. Right there was optimal exit for a long position. Notice now what comes in here. Okay, you see that, guys? Optimal trade entry for a short. Notice it's keying off of institutional level 142.20. Price trades down, slams down. Where does it go to? R1. Then trades back up to R2. It has no ability whatsoever to get above R2. Slips and goes softer, and we are presently trading at just a few pips below R1. Now, the trade for this fiber, if you're, I've had questions on the thread and baby pips, you know, should we be using GMT pivots or EST pivots? And I've actually told you you want to toggle back and forth between the two. And I'm going to illustrate now why I told you to do that, okay? And it's going to make a lot more sense to you by doing this. Every day when you start your new trading session or your trading day, okay, you want to have, obviously, the GMT pivots handy. You also want to have the EST pivots, okay? Now, what we're looking at here, notice it's 0. These are GMT pivots. Notice how very handsomely price keyed off of and respected GMT pivots. Okay, I'm going to leave these on for a second and we'll come back to it in a moment. Let's look at how price over the last few days has reacted to GMT pivots. S1, obviously, keyed off of that, found nice support, found resistance at central pivot. Okay, worked the MR1 area. Here's R1, here's central pivot, in between here is MR1. Okay, kind of respected central pivot in here, slipped a little bit in here. Obviously found resistance at R1 here. Very handsomely respected GMT pivots on S1, central pivot in here, found resistance. Resistance at central pivot, support here at S1. Didn't quite get down to S1 in here, central pivot, and R1. And go back. Let's go back one more day just for completeness sake. Kind of sloppy here. The only one that really respected was here and here. But now let's go and toggle to New York pivots. Okay. Price was finding support here. Nice resistance here. Nice support at central pivot here. Nice consolidation into R1 there. Nice resistance at central pivot here. Nice support at S1. Nice resistance at central pivot. Nice support at S1. It's just slipped above in here on that one. And this is the day where it starts to shift out of respecting EST, New York pivots, and moves to respecting more closely the GMT pivots. Okay. And back now to respecting the R2 on here, and just recently here in the Asian session of today. Incidentally, right now looking at this live, and by the time you get to see it, guys, I apologize if it unfolds, but just looking at where it's at right now, where would you likely expect it to trade to? See this resistance level here? Very clean level. We only did a price retest here. Okay, when price breaks above a resistance level or below a support level and trades right back to it within a few candles, that is referred to a price retest. Okay, what it's going to do likely is trade down to it, okay, and that will be a swing retest. Okay, so there's a difference. Okay, you have a price retest, which is very quickly after resistance or support is broken, trades back to it, okay, and then trades in the direction of breakout. Or you have a magnitude like 20, 30, 50 pips, moves away from the level and then trades back down to it as a initial swing retest of this level here. So we could very well take this level here, move it out into the future. Okay, yes, it's a little bit below this high, but I'm using the bodies of the candles again to illustrate that's the level that I would be monitoring. Okay, so we could reasonably expect price trade down here and maybe get a bounce, hopefully maybe setting up a potential move into London. That would be a really nice opportunity. And also, what is this level essentially, guys? This right here is a Asian session high. Remember what happens later in the day? Price, if it trades back down to it, should respect that level. And looking at your examples on your own charts, you'll see that that is in fact what usually happens. So that was the price swings for the fiber. Let's take a look at the cable. Okay, we have price trade. Let's just double check our pivots real quick, which ones we're sitting on. Okay, we're looking at New York pivots, midnight to midnight. Excuse me. Price trades up to R1, trades down softer, finds support here at these old highs, rallies back up, fails to make above here. All right. Now, would this be a potential optimal trade entry? Well, if we were to look at the fib, okay, right in here, optimal trade entry lays right on top of R1. You see that? Now, just because we're going short in here doesn't mean that price will always go right to this level. Like we've seen a lot of times it does, and that's what the confidence factor that this pattern brings. not not all the time. We see price go right to this level in here and then turn on a dime and go where you want it to. Okay. Many times it'll go up here and still just break above this high here. Okay, which is the reason why we always look for a minimum of 10 pips beyond the high we pulled the fib from. Okay, so my question to you is this: looking at this level in here, even though it trades almost back to the same level here, that's still optimal trade entry, and that's the trade that I took today. Now, why did I go into the cable here and avoid trading the fiber? Well, if you look at your smart money tool, overlay in the price action of the cable and the fiber. Okay, let's look real quick to fiber. Well, it's pretty obvious that the fiber was much stronger, right? Okay. Granted, there was a optimal trade entry here. Okay. But looking at price, okay, looking at price on the fiber, on the fact that we've made higher highs, higher lows, higher highs, higher lows, and just really jetting higher, to me indicated that the fiber was a much stronger currency to the upside today. And let's take the let me come back to that fiber for a second. I'm going to detail this right here, and I apologize for jumping around real quick. I'm a little disorganized tonight, so I ask you to bear with me here. Euro pound, I was stopped out of that trade at right here. Okay, price traded up, and I trailed the stop loss to this level in here, and price came down, tripped it, then moved a lot lower. So I was very glad that I got out in here. Missed this little bit more higher thrust in it, but that's okay. But that was the euro pound trade and where I got out of that. But let's look at the two markets. Okay. Probably be better if I did take this. Okay, take this fib off so you can see clearly. Alright, notice how the euro was trading higher. Let's take, actually, you know what, let's take the indicators off as well. And what I'm going to detail in this example is how you can look at closely correlated markets and determine at any given time frame which of the two has the more relative strength to be a buyer or a seller. Okay? Alright, we have price trading higher in here. Okay? Notice how at the same time frame we were unable, okay, we were unable to find a higher high between the two markets in here. Okay? This low in here this is not working out like I was hoping it would. Alright, well they're not going to line up exactly, but what I want you to do is here's 6 o'clock GMT and 6:05 GMT. Okay, so it's basically this vicinity in here. Okay. Alright, now notice how price started to fall off here while price started running hard in the fiber. Okay. Price made one more attempt to go higher here, but notice it was already starting to be distributed in the cable here. You didn't start to see that until later on in the fiber. Okay. We made lower lows. Okay. Here's, if you want to call it a reaction high or short-term area resistance, should be expected as support. Look at the difference between this level here and this low here. I mean, there's a lot of price movement that would need to come down to even retest that. Notice it wasn't much in terms of this high here to this low here. Okay, so price is a lot tighter in terms of where it had to go to break a resistance or support level, in this case for the cable. Now when price started to break down, once it broke this low here, you know, that was it. Train left the station. Here, notice what happened. Price traded below it, traded back above it. Then it started to peter down, yes. Okay. But then look what it's done. It's consolidated and slowly drifted sideways, while the cable still gave up more, you know, going lower and reaching much more dynamic to making a low here, comparably. By looking at price like this, okay, this way it may make sense to some of you. To others, it may make more sense to see the smart money tool where it's on the line indicator basis. Okay, and let's do that. Okay, looking at it this way, you could look at it as price was failing to make higher highs between the two, and that's how your overlay should highlight. Basically, you're just going to be looking for how price swings that are clearly noted between two correlated pairs, if swing highs aren't matching or being broken equally as price moves higher, okay, there are indications that that market is being distributed. Okay, so whatever positions have been acquired on the long side, they are now being sold off to the street money or less informed traders that are chasing the markets up, much like us as new traders did when we started trading, chasing the big candles up. They want to get in there thinking it's going to keep going up 150 pips more after it's done traded 100 pips, and all of a sudden we put the high in the market and then it trades softer. So let's go back to just the cable chart. Okay, optimal trade entry in here. Price broke down. Looking for a swing projection. All right. In this low here is where I was looking for at the 162 extension was here. Plus we had this really nice important reaction low here. So anything that was being trailed up here, if they didn't get trailed up tight for stops that are trading on the long side, obviously this would have been a real ideal location for stops to be rated. Price, notice how it went right down just below that. Okay, let's put a line on that just to illustrate. See that? That's all it needs, guys. One little tiny little pip. And then trades back up into the range, breaks back down, then trades back up to the 162% extension, trades off again, almost gets down to this level here for a reach for the stops, and it still could very well do that. Price bounces in here, trades back down, another optimal trade entry for what session? London close. Trade number 2, guys. Now let's look at what transpired there. Okay, we have an initial reaction here, bounces up. Okay, optimal trade entry in here. Yes, it flirted past a little bit in here, but 10 pips below is where our stop would have been. Okay, now where is our objective to get out? If we're going long here, remember we're trading counter trend. This is the trend of the day going down. Where are we going to try to get out at? Well, London close rules that we've already discussed earlier and previously in other videos. Okay, you want to take your profit at around 38% of the total range. So at that point, this is what you would have had. Here's your 38% retracement. Okay, so going long in this area here, getting out around in this vicinity would have been prudent. Now let's leave this on here for a second and draw back in our pivots. We'll use GMT pivots for now. Okay, and notice how we did have a nice 23% retracement overlap here, but really didn't offer much in terms of clues. So now let's go and change our pivots to GMT to New York time, EST. And suddenly, look what just happens. We now have a confluence of central pivot, 38% retracement, which is the objective for a London close trade. Okay, so looking at that, we had a potential to get in at 160.20 if you want to use the institutional level. Here, oops, sorry. Okay, up to there, and very nice, around 40 pips of profit potential. Now obviously price traded on beyond that and went up to the 50% retracement level on the trading range for the daily range, and this high here, this low here, this low here, traded back up to that level in there. But this was my exit today at 160.65 on the limit, and 160.25 was my entry, so 40 pips was profit there. So between the two trades, very nice price action today, and that was more or less what I did and why. And you can see the tools that are detailed in the thread and blog, they are still working and they still repeat themselves consistently. But the moral of this installment tonight was basically to answer the question of what pivots should you be focusing on. Um, I personally just use the EST pivots on my chart initially, but as we go into new sessions, or um, like every hour or so, I'll toggle back and forth between the New York pivots and the GMT pivots, just to simply get a closer calibration in terms of where swings are and where the new fibs may be laying. So I give you that as a measure of practice for you to implement on a daily basis and see how that works for you. And I wish you good luck and good trading, guys.
Get ready. Get ready. Get ready.